Welcome into America's Retirement Headquarters, home of the Retirement Guys Formula and America's Medicare Associates. Securities offered through Peak Brokerage Services, LLC. Advisory services offered through the Retirement Guys Formula, registered investment advisor. America's Retirement Headquarters, America's Medicare Associates, and the Retirement Guys Formula are separate and independent entities from Peak Brokerage Services, LLC. Thanks for joining us, and welcome to America's Retirement Headquarters, home of the Retirement Guys Formula and America's Medicare Associates, also retirement tax partners with Nolan Baker and Scott Kirshner. 419-794-3030 is the phone number. Once again, that's 419-794-3030. Online, find out more about Nolan, Scott, the entire team at America's Retirement Headquarters, the website ARHQ.com. My name is Chris Swan. Today on the show, how to pick the right Medicare plan. How much time should you spend on your portfolio, and common reasons people don't hire a financial advisor? All this and more. Before we dive into any of it, let me check in. Gentlemen, Nolan, Scott, glad to be with you as always. How are we doing today?
Doing good. Scott, I got to say thank you so much. I know you were recently down in Florida, and I think I had asked you to, put in your luggage some of that sunshine. And
yes,
here in Northwest Ohio, we finally got it this last week.
Yep. I paid attention to your requests and orders, and I packaged it up and brought it home.
Beautiful.
Had a great time in Florida, too. The weather was fantastic, which it always is this time of year, and it's good to come back and get warm weather here as well.
Yeah, you went south, I went north. So,
yes.
As many of the listeners know, last weekend took my family and a couple of his friends up to celebrate his last, senior break, if you will, before he graduates high school, and we went to Crystal Mountain. So if a place that I would highly recommend if anybody is a skier out there, very enjoyable. They had, I think, 51 ski runs, 3 days of skiing. I think I used muscles in my body I probably haven't used in a couple of years. But a little bruised, but nobody was broken. So we all came back safe and just had an absolutely fantastic time.
I consider myself somewhat of an athlete. I've played a lot of sports and soccer and baseball and golf and bowling and all kinds of stuff. But one thing I've never done is ski. Now, I did ski behind snowmobiles. We'd have the old, the water ski ropes, and they have the little bitty plastic skis, and, you do that. But I never downhill skied in my entire life. And I always wanted to, but I was fearful of that. Bruises are okay, but broken bones, I don't know if I can take that anymore.
It's kind of like that movie Cars, and I was like, I am speed. You're just so fast. Hey, Chris, speaking of what's going on new around the headquarters, I just want to tell everybody thank you so much for coming out to our sold-out economic summit that we had last week. Mm-hmm. We had the event where we had talked about the market outlook and had a packed crowd at our 10 o'clock and 6 p.m. session. I would encourage you, if you're a listener, if maybe Tuesday didn't work out last week for you, but you're concerned about the market, just look at an example of what's happened in the last couple of weeks. And if you've been listening to the show for a while, Scott and Chris, what we've been talking about is the importance of running this fire safety drill. And if we look at the markets here recently, it looks like the markets are on fire here recently. So again, we don't want you to panic in this type of environment.
Right.
At the event, we talked a little bit about looking at past tariffs, what that could mean. And, we've had tariffs that go back really to the 1929s. It's not the first time that something like this has happened. And so short term, it can be very common that the markets have this uncertainty, this short-term volatility. Mm-hmm. And what I want you as a listener to do, and I want you to understand, is volatility can sometimes create opportunity, especially if you know what your game plan is. So if you did not have the ability to come to that, but these last couple of days have got you uncertain, we'll extend that invitation where you can come out. I've got the presentation. I can share the specifics with you, but more so, I can talk to you about your individual plan, help you create a plan that will get you confident in this type of environment. Because if we can turn what could feel like internal panic and, scariness into identifying an opportunity, I think that's not only how you're going to survive when we get these type of market environments, but really thrive on where there can be some great opportunities that I see out there in the market right now.
Sure. A common theme at America's Retirement Headquarters is threats and opportunities. There are things out there that may give you an emotional, perhaps even visceral response to what's going on, but there are opportunities that lie within, and if you need help seeing them, Well, again, that's where America's Retirement Headquarters comes into play to help you out with that. It all starts with a conversation, start developing that retirement team action plan. But the phone number to get started is 419-794-3030. Let's turn our eyes to something that I would say this year has definitely given people a little bit of concern. Thousands of federal employees, they're facing buyout offers and terminations from the Trump administration's DOGE initiative. The stakes are high. You could take a buyout, which might be a nice windfall right now, but it could jeopardize long-term benefits like pensions and health care. Those that are vowing to stay, they could be terminated without a severance, nothing to show for it. So I know this is a question you guys have received so far. How have you helped federal employees make choices as critical as these?
This actually can be good news, I think, for a lot of folks. Can be bad news for folks in different situations. Scott, I know we just had some folks that came into the office. We'll call them Mark and Lisa. And they were probably a couple of years out from retirement, but ended up making a decision to take this buyout offer. And in their situation, when we took a look at it, I think they initially had come in and talked to you a little bit about some of the health insurance and trying to navigate that. That can be kind of a scary question when you're thinking about taking a buyout, especially if you're before the age 65 and figuring out, some of the health insurances that are out there.
Yeah, one of the things you want to obviously be prepared for is, if you take that early buyout, they're not going to extend your insurance. I mean, they may extend COBRA to you, and COBRA can be a very, very costly monthly expense that you're going to have. A lot of people don't really understand exactly how COBRA works. It's just a continuation of your current benefits. But the other thing is, if you're not going to take COBRA, then you're going to look at the Unaffordable Care Act. And when you're looking at that, it takes into account your reportable income. So if you take a buyout and you get that windfall, if you don't properly invest that windfall, that's going to be reportable income, and your insurance premiums could be drastically impacted by that. Even with Medicare, if you're a year or two away from Medicare, taking that large income, because Medicare looks back 2 years, okay? So like for 2025, we're looking at what was your reportable income in 23. Well, if you took that windfall buyout in 23 and your income that particular year was quite high, you could pay substantially higher Part B premiums. And a lot of people aren't familiar with that and don't even know that that's an option for Medicare. So you really want to make sure that if you're looking at taking the buyout, what am I going to do with that windfall? And that's where you come into play and where you really help. And that's why we work together, is to kind of, make sure we maximize their subsidies for their health insurance if they get those, or minimize their taxes.
Yeah, I think true. For Mark and Lisa, that's when you had pulled me into the equation to help answer the question of, do I take a buyout? If so, do I take it all as a buyout? They had other options where they could take a partial buyout, and they had some other options where they could take either a single life payment, meaning for the retiree Mark's entire life. He also had the option where he could take a 100% survivorship option. So that means, him and Lisa would get the same income for the rest of their lifetime. And, going through that, that's where we had kind of crunched the numbers. On the one, you think, oh, this big lump sum of money seems like a great idea. But when you think about them being fairly young, not quite even Medicare age, they need to have income for the rest of their lifetime. And, luckily they had other investment assets. And so in their particular situation, we lean towards them taking the monthly income payment, 100% guaranteed for both of their lifetimes. So we had this now good amount of money that is reliable income to cover the minimum monthly income needs that they have. Then what we did is we put together one of those retirement team action plans, and we went over that with them a few days ago. Within the retirement team action plan, again, what we're doing is we're looking at those threats and opportunities, to identify what are the ways that we could drive things up. In doing the portfolio analysis, one of the things that jumped out to me right away is, of their financial assets, they had roughly 40% of their money in cash bank accounts. And I get it, right? If you think about it, you want to have some of your money safe, not exposed to market risk. And then some of your money invested more for long-term growth could be a little bit risky. The problem was, by parking the money in the bank accounts, just a traditional bank savings doesn't really pay much at all. And so there's some money that could definitely be repositioned to make that money work and, put it in their best interest to try to earn some more money while keeping some liquidity because, as they transition into retirement time, obviously needing to have liquidity. The other nice thing about that is when you were talking about taking the severance, they're going to take a partial lump sum payment, meaning they're going to take part of it in a lump sum, but they have the ability to roll that money over to a self-directed IRA. And so if they do that, it's reportable but not taxable income.
Sure.
Meaning that then they could live off of those bank account assets, which would not be considered countable income,
right,
to help bridge that gap. So when you call it unaffordable health insurance, it's for those people that are not familiar with how to navigate, how they calculate what those expenses are. That gives them, some flexibility to be able to bridge the gap to get them to Medicare age. Then what we did is we did the independent portfolio analysis and we took a look at what their overall investment assets are and how they were positioned. And they had, in my opinion, a lot of unproductive assets that weren't working hard for them. So they're paying somebody to manage their money in, short-term investments that are earning minimal interest rates. So when you factor in, retirement account hasn't been taxed yet, and also the interest rate was so low, they're actually negative inside of there. Building out that independent income system then gave them confidence to know more about how to position their assets, put it together and to kind of build out that plan. So if you get into that situation, whether you're a federal, whether you're a state employee, and you're thinking, this may become something that happens to me, whether it's this year or within 5 years, think of the fact and realize the fact that many of the decisions that you make are going to be irrevocable decisions. So had you not pulled me in with Mark and Lisa and he would have taken the full lump sum payout, hopefully he made the right investment choices with that over time, because in that case, the government wasn't obligated to continue to give him and his wife money for the rest of their lifetime. So those are irrevocable decisions that you make, just like irrevocable decisions of when to, start collecting Social Security. These are things that we can kind of help you navigate. So if you are in that boat and think that you might get offered a buyout within the next 5 years, again, one of those things, like we talk about running the fire safety drill, let's run it now. That gives time for Scott to work on a health insurance strategy if you need to do things a year or two before, as he talks about, they look back.
Sure.
That gives you time to work with us on the investment side and the tax side to say, how do you fit it all together? And that's what we do in that retirement team action plan.
Whether you're in the private sector or the public sector, the options of a buyout is definitely one of those measure twice, cut once sort of situations. Have a team like America's Retirement Headquarters weigh the pros and cons, help you find out the best strategy for you going forward and how to, even though it may not seem like it, still be able to retire on your own terms. It all starts by reaching out, setting up a time to speak with them. 419-794-3030. That's again, 419-794-3030. You can also go to the website as well, and that is ARHQ.com. We've spoken about annuities before here on the show, and we describe them as a way to inject lifetime income into a retirement plan. But Cheryl Moore from Wincontel.com says what many people don't understand is that annuities also act as a safeguard against longevity risk.
So this is basically taking the fact that I might live too long or too long for my retirement savings, certainly, and I need a way to hedge that risk. That's what an annuity does. But the money person is probably thinking, well, why would I sell the annuity? Because I can sell them a bond and a stock fund that's going to way outperform that. Well, that might be true, but does it have that insurance feature where it guarantees the paycheck for life? No. And really, that's what the client's communicating, right? I need guarantees. I don't want to run out of money. And that's exactly what an annuity is made for.
Now, I know you've had this conversation numerous times with clients that have come in and they may treat that word, like a four-letter word. But why are annuities so misunderstood?
I think annuities are definitely misunderstood, and I think a lot of financial products can kind of be misunderstood. And, spending 30 years plus in experience of kind of going through this, it's an area where to kind of educate people on the different choices. First, I would say, some financial products in general, just investing in the stock and bond market can be somewhat misunderstood. I'll give you a perfect example. We had a couple that had come to our recent Mancy's dinner event that we had and came into the office for a review. They had what I would refer to as a traditional 60-40 split between stocks and bonds. And they were using a investment advisor. They were paying an investment advisor to manage their portfolio. The investment advisor was then selecting what is called a third-party money manager to then make the diversification between the funds. That third-party money manager was then putting the money into various ETFs and funds that ultimately, at the end of the day, bought stocks and bonds. And I, had talked a little bit to them, the fact of how many different layers of people were involved in that process. And every layer ultimately cost a little bit of money. So when we looked at the 40% that they had in the fixed income bond fund market, they're paying management fees, third-party fees, underlying fund and ETF fees and expenses, for an investment that in the last couple of years, bonds have really been a challenge, where they could eliminate those fees and expenses. They could take the money, whether it's an annuity or using like a FDIC insured bank CD, they could move it over into one of these fixed accounts and eliminate all of those fees and be able to lock in a 4 to 5 to 5.5% interest rate, for a set period of time. And that would dramatically lower the fees and expenses that they had as well. Annuities, when we think about that word as well, that oftentimes refers to going back in the good old days of pensions. Mm-hmm. So in an earlier segment, we had talked about some federal and state employees that are being offered buyout options. In their buyout options, one of the choices that they have is, how do you want to receive your money? Do you want to get a lump sum payment, or would you rather get an annuity payment for the rest of your lifetime, or an annuity payment for the rest of your lifetime and usually your spouse's lifetime? Having income that's going to last the rest of your lifetime, I think, can be very powerful. And again, dependent upon how an annuity is structured, there are annuities that will offer either lifetime for a set individual's life. They offer lifetime for a couple. You can get a set number of years that's paid out on an annuity. There's a lot of flexibilities, but these vehicles help address that longevity risk. And one of the biggest risks, I think, of a retiree is outliving their money. And so having some things inside of there that can help them not outlive their money will give them a lot of peace of mind. Again, when we go back and we look at the things that are out there, I would say the challenge is there is some complexity. I had another couple that were in the office recently, and when he lost his dad, the advisor that he went to set him up with a variable annuity. And so the complexity of a variable annuity, when you have mortality expense ratios, sub-account fees, you've got rider cost if elected on side of there. And then in his particular situation, he's, forced to take required minimum distributions because it's an inheritance account from his dad. That complexity, he maybe didn't really understand it. We did the annuity review with him and showed him where he could eliminate a lot of those fees and get something that's a little bit more cleaner. There's a lot of industry jargon. Our show, we try to talk about and teaching you how to retire. We try to, break it down, but I get it when you think about things like riders and caps and participation rates and surrender charges, lifetime withdrawal benefits. Those things can be confusing. It's like, we talked about, it's a matter of figuring out what tool is most effective to accomplish the outcome that you want to have. I can get a hammer out and I can bang a screw into a wall, but is that the most effective way to do it?
Exactly.
Annuities tend to be good, again, for the piece of the part that you want to have income. You want to have some type of reliable income. That's what they've done for hundreds of years. I had a really good interview that we did when we went out to Yale with a couple of the professors that are out there. And, if you look at the history of annuities, they've been around for hundreds of years. They've been using these type of products. So they can, work in the right environment. You just have to understand, again, how the products work. If you have an annuity and you don't know how it works, that can be something that I'm happy to kind of walk you through. The good thing, Scott, about annuities, if you think about, you had said in the past, they were maybe more misunderstood or more talked negative about than today, is a lot of times annuities are tied to interest rates. And so what we have today is we have, one or close to the highest interest rate in 20 years. So the annuities today can be much better than they were in the future. The bottom line is if you have an annuity and you don't understand it, let's talk about it.
All it takes to get started and have that, that x-ray done, 419-794-3030 is the phone number. If I might be so bold, I think one of the main reasons annuities are so misunderstood is the person relaying that information may not necessarily have a full understanding of it on their own. Sure. And so there is some confusion. It may be the only thing that they have access to, but getting a little bit of that clarity, getting a little bit of that education is something the team at America's Retirement Headquarters prides themselves on. And so to continue that education beyond the show here, reach out to them, 419-794-3030, or go to the website, ARHQ.com. Now, we talk a lot about risk tolerance and retirement planning. How much of your retirement savings do you want in the stock market? There was an article I read, guys, Kiplinger, that says many times people's appetite for risk is not determined by their personality, but by what the market is doing at the time. If you're on a winning streak in Vegas, you're more positive about the game. No one wants to kill the goose that's laying the golden egg, after all. Do you find that to be true? And how do you help investors control their emotions when it comes to investing?
I think a lot of that does have to be said about current market conditions. In fact, I think there's been some surveys that talked about how people invest, and it changes based upon the weather that's outside. And I would agree, if you think about like the last week, the weather's been great. I feel a lot better. And so, investing wise, I might feel a little bit better too, especially, when things are going well. And then, if we think about what we've experienced here in the last couple of weeks, this is the first time that we've seen a significant pullback in the market in the short term. And so how you control your investments and your emotions when investing right now is going to be absolutely crucial to do that. I don't know about you, Scott, but, when you look at your investments, you look at your portfolio, do your emotions get involved?
Well, there's absolutely a lot of people let the emotions get involved, and I would be lying if I said no. I mean, everybody has a certain degree of doom and gloom when you see things not going the way you want them to go. I think a lot of people that I talk to and what I've experienced based on, with Trump being in office now and with the crazy things going on, I've had a few people mutter, maybe he's doing too much too soon. But I haven't had anybody say to me anything about being concerned about the market. I think, just an opinion, I think that people are excited about what's going to happen in the future. I think, based on what they've experienced in the last 4 years with the uncertainty and everything, I think they're a little more optimistic. So I don't know that emotions are impacting as many people as now. Not that they aren't, because they absolutely are. And it's kind of like the previous segment when we were talking about all of the chatter about, Medicare. People are listening to this and they're getting emotional about that and saying, hey, I want to know what's going on because this is really starting to bother me. So, if anybody's sitting out there telling you that they're not impacted and do things based on emotion, I think they're kidding themselves.
I think they're right. So I think that's the first thing you got to do is acknowledge that you're a human being. You have emotions. You have emotions of fear and greed, and that's a normal part. But using those emotions to make investment decisions can be extremely painful. When you invest in the stock market, there's two ways that you lose money. One is you invest in a company and they file bankruptcy, right? So if you invested into some of these stocks and companies that went out of business and went bankrupt, those investors traditionally lost all of their money. They got wiped out. The other way you lose money when it comes to investing into the stock market is you buy an investment, you see it go down in price, and you panic and you sell it.
Right.
That is locking in a loss and giving you no opportunity. So what I want you to do is I want you to have a clear investment plan, setting and defining what your goals are, defining what your risk tolerance is, defining what your time frame is. If you don't need your stock market money for 5, 10, 15 years from now, short term, it really doesn't matter, what the market does. As you get closer to retirement time, that can happen. The second thing that you need to understand is that there are normal market cycles that we go through. We've been talking on the past show about running the fire safety drill and realize that normal up and downs happen in the market. In fact, if you look at tariffs in the past, we can see what the market short term did was have volatility. But that volatility, if you know those market cycles, can create an opportunity for the long term investors to avoid panicking on those dips and looking at downturn as maybe an opportunity to create. you want to have realistic expectations. I mean, I oftentimes will talk to people about how much money they can afford to lose, and nobody wants to lose money in the stock market. I get it. I don't either. I don't like to see negatives or reds on my statement, but you have to be realistic that when you invest in stocks, bonds, or risky assets, there's going to be times that even, what could be considered some of the best investments are going to go down in price. So helping by automating your investment decisions, automating your rebalancing decisions, not checking your portfolio too often, making sure that you're looking at your investment policy statement to make sure that it lines up, and tuning out the market noise can be a good way to get you through this. Realize that there's going to be bias in the market. Whenever panic sets in, all you'll see is articles about panic. Mm-hmm. And that's because your emotional bias will trigger those type of things. It's just like when you buy that red SUV.
I was just going to say that.
You're like, I'm the only one that has this. As soon as you drive it home, you see 4 other ones.
Yes,
You're like,
exactly.
Where were we at? So, the final thought here is if you're feeling emotional in this environment right now, let us get in the car with you. We can help you navigate this environment. We can help you look out for some of the blind spots that are out there, and we can help you continue to drive forward in this type of economy, setting a solid plan and utilizing some of the technology to help create that GPS to get you to where you want to go in your retirement years.
As we say so often here on the show, control what you can control. And if you need a little help controlling your own emotions to make sure that those bad days in the market don't turn into worse days because of moves you made, why not reach out to the team at America's Retirement Headquarters? Let them help you along the way. 419-794-3030 is how you go about doing it. 419-794-3030. And as always, you can find them on the website, ARHQ.com. I want to thank you, as always, for joining us here on America's Retirement Headquarters. It is the home of the Retirement Guys formula, America's Medicare Associates and Retirement Tax Partners. Hope you have a great week ahead of you. Gentlemen, always grateful for the time. Appreciate you guys. And as we wrap up, I want to leave you with the final word.
Yeah, get out there, enjoy the beautiful weather this weekend, and then over the next couple of days, I think spring is coming closer. Turn off the nightly news and just enjoy the weather, enjoy your family. And remember, when you think retirement, think America's Retirement Headquarters. It's home of the Retirement Guys formula, America's Medicare Associates, and Retirement Tax Partners. We'll see you back here next week, same time on Toledo's largest talk.
America's Retirement Headquarters is located at 1700 Woodlands Drive in Maumee, Ohio. You can reach them by calling 419-794-3030 or online at americasretirementheadquarters.com. Exposure to ideas and financial vehicles discussed should not be considered investment advice or recommendation to buy or sell any financial vehicle. Investments can fluctuate and when redeemed may be worth more or less than when originally invested. Nolan Baker is not affiliated with nor endorsed by the Social Security Administration or any other government agency and does not provide legal or tax advice. Please consult with your attorney, accountant, and or tax advisor for advice concerning your particular circumstance. Annuity guarantees rely solely on the financial strength and claims paying ability of the issuing insurance company. By contacting us, you may be provided with information about insurance and annuity products offered through Nolan Baker, Ohio Insurance License Number 27787.